Good evening. It is Sunday, January 12th, 2025. It's almost 8 p.m. on the East Coast, and this is Robert Sin at CEO Technician on X, at Goldfinger on CEO.ca, and this is Goldfinger Capital. I want to make a quick video tonight talking about gold specifically, talking about gold in China, maybe a little bit of Trump thrown in there, but YouTube will probably suppress the video if I say that word a few more times. So what is going on with gold in the first two trading weeks of 2025? Gold has started the year with a rally. We're above 2,700 as I speak. We're above 2,720 actually. It wasn't long ago. It was less than actually 2 weeks ago that gold was testing support down near 2,600. Okay. What has caused this $100 an ounce rally in gold in the face of a strong dollar, rising treasury yields? I mean, we've got kind of a bit of a breakout going on in the 10-year note yield. Even Friday morning, non-farm payrolls report beat estimates. I mean, it was a pretty healthy non-farm payrolls print. Now, we can spend an hour talking about the quality of that data and how strong the economy really is. There's a lot of different opinions out there. But anyway, the fact is the data was better than expected. The unemployment rate ticked lower to 4.1%. Gold initially dumped on that news. It dropped down to, I guess, about 26.88. But then look at these big green candlesticks. These are 30-minute candlesticks. It reversed sharply higher, briefly trading above 27.30. But the main thing is that gold rose on Friday when the payrolls report was basically a blowout, right? So if you had told that to 10 different traders, 9 or 10 of them would have told you gold would be down, given the better than expected data. Well, 9 or 10 of those 10 traders would have been wrong, right? So we have gold trading well in the face of strong economic data. We have gold trading well in the face of a strong dollar. We have gold trading well in the face of rising treasury yields. What is really going on out there? When we have seen gold trade like this in the past, and I've got this chart to show a little cleaner. So here's the dollar rising. Here's the 10-year treasury yield rising. And here's gold rising for the last month, right? Now you could say, well, it's kind of gone sideways. It's down off its October high. Yes, but when you consider just how pronounced this strength has been in the dollar and how weak bonds have been, the price of bonds, and how high yields have risen, this is an admirable, very strong performance from gold in US dollar terms. So the correlations, the typical correlations that we become accustomed to for the past couple decades, I guess, are shifting in a big way. And similar to how they started to shift in the second half of 2022, how they shifted throughout 2023, everybody was scratching their heads on why gold was doing so well with strongly positive and rising real yields, right? We need to pay attention. What is going on out there? What's driving this? Well, one factor that I believe is definitely driving it is China. Now, that's not new, but China took a break for about 5 or 6 months in 2024. They didn't do any official buying of gold. Now, Chinese consumers, investors definitely did keep buying gold, and maybe there was even some secret buying by Chinese authorities. But, officially speaking, you can see here in this chart, from May through October, China didn't add any gold to its reserves. Okay, but It resumed in November, which is interesting. That was also the month of the U.S. election when Trump won, and it continued, actually accelerating those purchases last month. I bet that January will also be a strong month of PBOC, People's Bank of China, gold buying. Also, you can see this is kind of hard chart to see, but basically, China gold went back to premium. So gold has flipped back into a premium in China after being at a discount for several months. So strong signs of China gold accumulation in full swing. So why is China accumulating gold? Let's just take a look at, and by the way, this is a bear steepening, a steepening of the Treasury yield curve after a long inversion, actually a 2-year inversion. That's a topic for another day, but there have been periods of Treasury yield curve steepening that were very bullish for gold, coincided with great gold strength. 2007 was one of them. 2019 was another one of those periods. But anyway, back to the topic at hand. So Caterpillar. So I want to talk a little bit about China-sensitive stocks and what markets are telling us about what's happening in China. So China announced this big stimulus package back in September, and it was lauded by many as being the biggest stimulus in a very long time from the Chinese authorities. And it definitely served to kickstart some rallies in China-sensitive stocks. So one of them would be Caterpillar. It gets about 20% of its revenue from China. And if you consider global, sensitivities to China's economy, I would say definitely more than 20% of Caterpillar's revenues are very sensitive to Chinese economic activity. So it had a very nice move there, September, October. It peaked after the election in the US, like so many stocks did. And Caterpillar put in what I can definitely call a head and shoulders top. And it has been rolling over down the right side of that shoulder for the last month. And then on Friday, it broke down from what I would call a bear flag pattern. So a very bearish looking Caterpillar chart. That doesn't speak well to the health of the Chinese economy. EEM, the emerging markets ETF, well, look at this. Pretty pronounced downtrend, and actually below where it was trading at when those China stimulus the stimulus was announced in September, right? So it's done a full round trip. It's given back the entire stimulus rally. Shanghai Stock Exchange Composite, well, it hasn't fully round trip, but you can see it's definitely in a bit of a downtrend here in early 2025, and it's at risk of breaking support, right? This was a pretty powerful short covering rally, but it has not seen follow through, and the Shanghai Composite has basically been going nowhere for the last 3 months, and now it appears to potentially be breaking down. So if we just look at China sensitive areas of global stock market, it's not singing a bullish tune. Now, what else is happening? Well, Trump is about to be sworn in as president of the United States in just over a week. And he's looking to be a busy guy in the first couple months of his second term as president. And he has a lot of plans for US-China relations. A lot of plans, right? Trump 2.0 definitely stands to be a catalyst for a moment of reckoning for China's economy. I'm not going to spend an hour on this video digging into all the details of China's economy, but let's just hit some high-level points. China's banking system is $56 trillion. That is enormous, the biggest in the world. That represents 320% of its GDP, which is about 18 trillion, and 54% of global GDP. So China's banking system has 56 trillion in total assets. That is enormous, right? Also, there's just debt. The Chinese economy is awash in debt. When you look at all the different areas of the economy and all the different debt in those areas of the economy, local governments, banking system, property, construction companies, right? And then the government debt and the hidden government debt. So China's total debt to GDP is more than 300%. The total debt to GDP. It is awash in debt. China is also going through a property bear market. So there was an enormous property bubble that was constructed from, let's say, 2000 to 2020. Since about 2021, that bubble has been bursting. It has been bursting. But China is a planned economy. It's not a free market economy like we think of in the US or Europe or Canada. It's a planned economy. And so the government has done a lot of things to cover up the full extent of this property bubble and the unwinding of the bubble. A lot of the data out there is very questionable, to say the least. And again, it's not a free market, it's an engineered economy. So they're allowing the air to come out very slowly, gradually. In other property bubbles in history, like for example, the US subprime bubble 2006, 2007, 2008, or the Spanish real estate bubble during that same time period, and other ones throughout history, the bear market unwind lasts for about 8 years on average, and the average decline is 41%. Well, China's only 3 years into theirs, and prices are only down about 11.5%. So still early. They're not taking the pain. They're pulling the Band-Aid off very slowly. The data we do get shows an economy that is cratering. New home sales down 26.8% year over year in August. They're down month over month, month after month. It's painful, okay? And the real estate construction segment of the Chinese economy is a big chunk of it. It's a very big chunk of the economy, much bigger than it is even in the US. So the confidence in the economy is eroding. Accurate information is scarce. And China's government, China's central planners are going to have to do something. With a deflationary environment with a lot of debt, what do you think the move is? Deflationary, so money's getting more valuable, but there is too much debt. So the value of the debt is choking everything, right? It's choking everything. And the cost of paying back that debt is going up, not going lower. So what's the move? Well, it's got to be currency devaluation. Currency is always the outlet for government debt excess. So far, China has resisted currency devaluation at great costs. Why do you think they're buying gold? Why do you think China has been accumulating gold so steadily since 2022? China is actually the biggest buyer of gold since 2022 globally. Okay, they are the big giant in the gold room, continuing to accumulate gold. Why do you think they're buying? Well, maybe gold will play a role in whatever devaluation, revaluation, easing that they're thinking of carrying out here in 2025. They're waiting for Mr. Trump to become the president so they can get a better deal and they can do whatever devaluation of the currency or revaluation to the US dollar as part of that deal. Obviously, Trump also wants to have a stronger economy. He doesn't want to have a dollar that it is so strong that is hurting U.S. exports and manufacturing economy and causing a crisis globally. I mean, the emerging markets, as we can see, are choking on this dollar strength. Okay, there's a very strong positive correlation between, the emerging market economies and stock markets and U.S. dollar strength. The rest of the world wants a stable slash weak U.S. dollar, not a U.S. dollar wrecking ball that makes the cost of all their dollar debt that much more punitive, right? And so I believe that gold is going to have a role to play in what's to come in 2025. And whenever debt bubbles unwind, currencies devalue, money is printed to try and ease up on the debt deflation in the Chinese economy, well, that means that the fiat price of gold is going to go higher. How much higher? We don't know. Some people think that China needs to devalue its currency by 30%. Some say 10%. Maybe somewhere in the middle. I don't know. But they are buying a lot of gold. Chinese investors are buying a lot of gold, and they're doing it for good reason. Gold is that stable store of value. It is essentially a global currency. Everybody can agree on what gold is, what its value is. We can look at markets to see that value, that price, and there's exchanges across the globe where it can be easily transacted. And the Shanghai Gold Exchange has played an increasingly big role in global gold trading. In fact, gold is moving. It has moved from west to east. It continues to move from west to east. So that gold strength that we have seen in the last month is happening for a very good reason. And maybe we're going to find out more about what that reason is over the coming weeks and months. Just in terms of like near-term technicals, we're a little bit overbought here in the near term. Gold has had a big move. You can see there's a little bit of a downtrend line here it's about to run into. So not calling for gold to make a new all-time high tomorrow. But this strength is especially notable. And when the time is right, it could be a week from now, it could be a month from now, when gold does break out of this little multi-month triangle it's been carving out. I think new all-time highs are on the horizon in 2025. All right, there I said it. Thanks for tuning in. If you like this video, if you got value from it, if you enjoy my content, please hit the like and subscribe button. I appreciate it, and I appreciate you. Thanks for watching, and have a powerful trading week.